Thank you very much for coming in, Ken. Good evening. Let's start off with, we had an auction today for the 182-day T-bill. We haven't seen the result out of that, but how do you expect it to play out?
Yeah, the results are not yet out. We expect them out any moment now. But of course, we expect this to still pick up. We've seen dismal subscriptions for the prime rates over the last, I'd say, 6 to 8 weeks. We expect it may breach the 13% level, which means the spread between that and the term auction deposits and repos, the average rate is at about 13 to 13.5%, may actually be wiped out. So we may see more interest begin to turn towards that side.
Because the yields have been largely disappointing. In fact, banks are staying away from the debt market at the moment.
Yeah, that's pretty true. I think it's also what's happened. We saw quite a bit of activity after the MPC, but once the market leaders forum met and they announced the issuing a 5 and a 10-year paper this week, next week, what we saw was a lot of people decided to sit it out and wait for those issues to be released. We've actually seen a lot of interest just before the MLF meeting. Kate was coming in at the 5-year tenor, probably papers such as the infrastructure bond, which has about 6 years to maturity, and the 5-year bond issued last month. So we saw a lot of interest here. But what's happened now is people are holding off, waiting for this primary where they expect to get better yields.
What do you see that yield curve likely playing out for the 5 and the 10-year?
Of course, we expect there'll be some aggressive bidders because currently what's happening with the 5-year, it's about levels of, I'd say about 13%, between 12.5 to 13%, and the 10-year more or less at the same level because we're seeing between the 5 to 10, the curve is pretty flat. They've been aggressive bidders going at, traditionally it's usually 100 basis points above market trading levels. So even if it does come above levels of 13%, we expect these bonds to be traded down quite aggressively. I mean, with outlooks on rates looking, looking down. So what will happen is we expect single-digit inflation this month. You saw oil prices last week. This week came off.
Right.
So we expect these papers will be traded down quite aggressively. We saw that the week before the MLF meeting where the infrastructure bond, which was traded down from levels of 1350 to levels of about 12.6. That's almost 90 pips. So that was quite impressive. So we expect the same to play out after this auction.
At this point, is it accurate to say the market is remaining very hesitant?
Yes, the market is hesitant, but I don't think it will hold. It will probably last till the results for these treasury bond auctions come out late next week. Then we should see quite a lot more activity coming to the secondary market, especially where investors are looking to lock in double-digit yields, basically because they expect towards the close of the year we may be in the single digits.
Right.
So we will see a lot of people come back to the market, and also as we expect the liquidity, the central bank may begin to loosen liquidity somewhat. So all this money will be looking for a home, especially in this third quarter. We expect huge maturities, and all this money will have to find somewhere to go.
It was a very slow day on the currency front, though. Not much activity, though the central bank was in the repo market again for about $23 million in excess liquidity. What are you seeing in the shilling?
I expect it to continue trading range-bound. CBK has been very aggressive in the repo market, in trying to hold out liquidity, but we're still seeing liquidity coming in.
Right.
That's also why you're seeing the interbank level. Today we expect the average to come in at below 13%. So, but with CBK being aggressive, they're still holding out, supporting the shilling.
And that is making it very stable at this point, nothing too volatile.
Yes, it's not volatile at all. Although you also have to look at the aspect that it's the middle of the month.
Yes.
Traditionally, we're usually quite stable around this period. We usually see a bit more movement towards the beginning and the end of the month.
Okay, let's move on to the Nairobi Securities Exchange. And equity turnover was up today for a third straight day, though the NSE 20 share index down just under half of a percentage point, closing at around 3,778.1. What did you see as the highlights?
Basically, I think, yes, turnover was up, but the index was down. So
yes,
basically indicating those prices were beginning to come off, especially on some counters. We've seen investors come in and begin to take profits.
Right.
Counters such as East African breweries and KCB. So, and these actually contribute quite a lot to the 20-share index. So, this profit taking we expect it to hold probably till around the end of the month. So, yeah, I think ABL trading from highs last week, it was 240. Now today was trading at about 220. There were actually off-market offers at 220 bob.
Yes.
So, I mean, people are taking profits. They've made their gains, and we expect they will come back in towards the close of this month as the breweries is closing their books.
There's also a KCB, which is an interesting one right now, and again, you're expecting it to pick up towards the end of the month?
KCB, not necessarily. KCB is always there's always foreign interest. We've seen them come off, but also as you mentioned, we're also expecting earnings results from a lot of the banks.
Yes.
So this may spur quite a bit of activity on these banks going forward.
What do you think of the Diamond Trust Bank rights issue?
I mean, Diamond Trust is a strong stock.
Yes.
Strong fundamentals. Valuations after the rights issue, most people are expecting it to trade above 100 shillings.
Right.
Currently, today it was at it closed at an average of about 89 shillings. Rights began trading today. They were trading at 50 bob, although there was only a block of about 100 rights traded at 50 shillings. But this is basically, I think there's also a lack of supply, because what we expect is a lot of investors are actually going to take up their rights and will be looking to probably apply for more. So we may see a lot of demand in the market, but no supply.
And we're seeing a lot of these banks now responding to the CBI rate cut and starting to bring down their interest rates as well. Maybe not as steeply as we might expected.
Yes, I think the two banks that have brought down their base lending rate are I think Stanchart and
Barclays.
And Barclays, yes, as well. They've done it 150 basis points, basically mirroring what the MPC did.
Right.
I think this has very little impact on the lending rates. We've seen as at April, loan growth had come down by about 22%, and this cuts in their base lending rates will have very minimal effects on current loans that exist, and also for new investors looking for credit. So mostly I'd call it it's mostly a PR move.
You feel it's very cosmetic?
Yes.
All right, we'll leave it there. Ken,
All right.
Many thanks. Ken Minjire with the Stanbic Investments Fixed Income Analyst, speaking with us about the lending rates and a lot of other things moving the markets here.